I would characterize it the way I have since this bull market started. It's the wall of worry, particularly since 2013. We've seen a wall of worry. Yield curve, China, Fed too tight, and so forth. We actually have a different point of view. It's contrarian. I've been listening to CNBC all day. I've heard the same story all day. We do not think the Fed is too tight. If you look at the ratio of the T-bill to the Fed funds rate, not too tight. We think the yield curve will invert, and one of the reasons is inflation is going to be much lower than expected. Oil is one reason, but we think disruptive innovation, which is all we do all day long, is deflationary in nature. It's good deflation. It stimulates unit growth. So we think the economy is going to surprise on the high side next year. And as far as China trade, China-U.S. relations, I am seeing the seeds of a massive global tax cut brewing around the world in the form of actual income tax rates in China cut and tariff reductions. Even Germany, the German auto manufacturers want 0% tariffs. They're fine with that. So I think that the market is, I'm happy it's climbing a wall of worry. These are the strongest bull markets we're ever going to have. We don't want everybody chasing an up market.
We certainly don't have that, at least haven't had it since January. And I know that your idea about the yield curve as being not a recession signal, but a deflation signal kind of goes back 100-some years,
Yes,
right?
It goes back to the late 1800s, early 1900s. So 50 years through 1929, the yield curve was inverted half of the time, with the biggest inversions taking place during the periods of strongest growth.
Yeah.
So inflation was surprisingly low, and growth was surprisingly high.
Certainly a contrarian point. Michael, whether that is the case or whether that proves out to be the case, investors right now have their signals and they're kind of conditioned to behave in a certain way. And the stock market just has not been able to make a lot out of what we've seen right in front of us, right? Which is low bond yields and very strong earnings growth. Where do you think that leaves us here?
I think it leaves us with a more uncertain economy. I'm not of the belief that we're looking at a stronger than expected economy next year. I think that the bond market is getting it right. I think there is going to be a slowdown. I don't think there's necessarily going to be a recession, but I just think it's just going to be a more cautious world going forward. I think that whatever happens between the United States and China certainly will be a positive if they can settle the trade issues. But if you just look at what's happening in China, China itself is slowing down significantly so. And so I just think this is really a reaction to what I think is the reality, which is the economy is going okay, but earnings I think are going to decelerate somewhat, and I think it's just going to be slower growth going forward.